Marc, you're many things, but you're also a distressed debt guy. When you take a look at the system, where are the opportunities and where is the trap?
Oh, the opportunities for what we do right now is immense. And I think it's for anybody who does private credit. And the simple reason for that is it's going to be more difficult and it's harder for banks now going forward to lend capital. Or even if they lend money, they're going to require different covenants. It's just going to be harder. So for folks like me, you're going to be able to step in, you're going to be able to lend money. It's going to be sort of a golden age for us because we're going to be able to come in, and the banking system, in my opinion, right now going forward, there's just going to be more requirements. There'll either be more equity requirements, banks are going to be more careful, the Fed is going to supervise more. So all that means is that it's going to be harder to lend, and for folks like me, it's going to be easier to come in and sort of dictate terms.
Net, Marc, what you're talking about is a tightening of lending standards. And I'm wondering what kind of a default rate ultimately we're going to see off that, see coming off that. The banks are going to be more cautious. They're going to tighten up on who they lend to. You're going to be lending, but probably at higher rates going forward. That's a tightening of lending standards. Does that imply a significant step up in the default rate?
It implies that the default rate should move up. How much, I don't know. The economy is still doing well, but ultimately, if you're not going to be able to borrow, it's going to have an effect on businesses, and therefore you're going to have more issues.
Marc, we were talking to Bruce Richards earlier this week, and he echoed something very similar. He definitely said the golden age of credit. He was talking about 10% default rates. He was looking at some bank assets because banks are going to need funding. Going to the government is going to cost a lot, so they're going to have to, at some point, offload assets. He really didn't like things like commercial real estate. Can you dig in a little bit as to the landscape?
Well, the reason he doesn't like commercial real estate, and I don't want to speak for Bruce, but I would say to you right now on sort of loans, just look at New York City. You had a number of buildings where people ended up borrowing, having a fixed rate mortgage 2 or 3 years ago at 2% or 3% or 4%, whatever the number is. Today, if that loan came due, you're not going to be able to lend at that same level. So it's going to come due and you're going to pay somewhere around 7-8%. So the cost of capital for everybody is going up. That's going to create issues. Whether it ends up being a 10% default rate, I don't know, but it's definitely going to be a much higher default rate. Or banks are going to have to end up just rolling over those loans. But there's going to be issues and stress within the system over the course of the next couple of years because of that.